Hello, and thank you for joining us at xm.com. This is the weekly outlook. Of course, we'll be having a look at the week ahead. I'm Christina Marujos, and joining me today is Rafi Boyajian, Senior Investment Analyst. Rafi, it's good to have you with me. Now, it's looking to be a fairly quiet week. However, there are a few things coming up that markets will be looking at. Let's start with the developing US-China feud. It appears, though, that the Australian dollar has brushed off these renewed tensions. Australia will be reporting quarterly figures on construction, that's on Wednesday, and capital expenditure on Thursday. So how do you think the Aussie will perform?
So, Christina, you quite rightly said that we've seen some rising tensions between the US and China, and that has impacted risk sentiment slightly in recent days. We've had a slight risk-off tone, though given the gains we've had in recent weeks, it's only very small losses we've seen in equities markets in particular. And as you said, the Australian dollar has in fact continued to make fresh highs. Next week, there could be some risks from quarterly data on construction and capital expenditure, which will give us indication as to what to expect in the GDP numbers coming up in the following week. Overall, investors are fairly optimistic about the outlook for the Australian economy, at least relative to other advanced economies, because Australia hasn't been impacted as much by the virus and its economy has started to reopen. And given that it trades heavily with China, and China has also started to reopen, so things are not looking as gloomy with Australia as with some other economies. So overall, even if we might see some knee-jerk reaction in the Australian dollar, we'll probably continue to see the Aussie maintaining its uptrend.
Now, it appears that the worst has passed, for now at least, regarding oil. After the severe slump in demand and prices, oil seems to be on the rebound, but contrary to what one would expect, the Canadian dollar has been unable to gain. Now, with Canadian quarterly GDP numbers coming up, do you think the loonie will come under further pressure this week?
Well, that's right. So the loonie's rebound from its lows have been not particularly inspiring, especially when compared to the Australian dollar's impressive rally. And even though we are now seeing that oil glut easing somewhat over the past week or so, the loonie has been unable to break above a key resistance barrier against the US dollar and could potentially come under pressure next week from the GDP numbers. So the loonie will be vulnerable to a big miss in the GDP for the first quarter, and that's because although we are seeing oil prices recover, the outlook overall for the energy sector, which is the main driver for the Canadian economy, is not looking too great at the moment.
Turning to the Eurozone, the euro had a rather good week, one would say, with the announcement of a 500 billion euro recovery fund and upbeat PMIs. We're expecting a lot of data out of the Eurozone this coming week. Do you think that these data can damper the single currencies rally?
Well, that's certainly possible, but we did just have the flash PMI numbers for May for the euro area, and they were slightly better than expected. We are seeing a bit of a recovery in early May, and the main data next week, which will be the German IFO business survey and the economic sentiment indicator for the Eurozone. Now, those will probably stay within trend, as we saw with the flash PMIs, and point to a bit of a recovery in the early parts of May, and that should further help the euro overall, though in order for the euro to make much more substantial gains, we will need to see further evidence of economic recovery in the Eurozone.
Finally, let's look at U.S. consumption, a significant part of the U.S. economy. Investors are bracing themselves for weak numbers, but the question is how weak they are going to be, and what will that tell us about the economic contraction we're likely to see in quarter two?
That's right. So the main data from the US will be the personal consumption, personal income. We already saw for the previous months big falls in these figures, and for April we're likely to see another big fall, especially personal consumption that's expected to have plunged by a record 9.7% month on month in April. We're also going to have the second estimate of GDP for the first quarter, as well as durable goods orders. Durable goods orders expected to decline again in double-digit numbers. But despite all the gloomy numbers we're expecting, the dollar could possibly gain on the back of it, because if that risk-off tone deepens in the coming week and the US data provides a bit of a reality check for the markets, so the dollar could actually benefit on the back of that, because it is, of course, it has been acting as a safe haven throughout this virus crisis. On the other hand, better than expected numbers might actually help the dollar pull back a little bit.
Rafi, thank you so much for joining me and for your insights about the week ahead. And thank you for joining us here at XM.com for the Weekly Outlook.